Well, central bank rate expectations continue to ratchet up, not just in the US, but across the G7, G10 curve as well. Real rates in the US go positive for the first time since 2020. Realised inflation continues to skyrocket around the world. Yet we've got equity resilience, and at the same time, the yen is getting battered from pillar to post. We talk about all these factors between Blake and I, and more on The Trade-Off. Well, hi there, ladies and gentlemen. My name's Chris West. I'm head of research here at Pepperstone. I'm going to be joined in 2 seconds by Blake Morrow from Forex Analytics. And we're going to be navigating, we're going to be circling around all the landmines and the key thematics, the setups in this mad world of trading. So let's bring Blake into the program. Blake, how are you doing, my old friend?
I'm doing great, Chris. And you know what? I want to say welcome back. It's good to see you. How was your trip to the wild?
Mate, it was good. It was good. It was good. I mean, it's not every day that some of the neighbours come round and bring a 2-foot lizard over for Easter for you to eat, and then the next day you drive down to Uluru and you see a dead camel in the middle of the road. I mean, these are sort of stuff that you don't see in London, and it's stuff you don't see too often in the CBD of Melbourne, and maybe you see that in Arizona, but certainly it does open up your eyes to the world, and you can't get your coffee in the morning, so it's you've obviously got the wife's obviously gets a bit moody in that situation, but generally speaking, it's a really good place. It's glad to be back. It's glad to be talking markets again with you, Blake.
Well, it's nice to have you back, and we're really excited to have you back, and I'm sure it was a wild trip. I can't wait to hear more about it.
I'll post some pictures of the camel because obviously you don't want to see any animals hurt in the process, but yeah, it was savage to see, to be honest. But this is the Outback is in its entirety. These are the sort of stuff you don't see in Melbourne every day. But mate, I'll tell you what, there's a lot to get through, as we always do, and it's great to be to talk in all these markets. I could talk camels all day long with you, Blake, to be honest. But let's get into it. Let's go into Topical Thunder. You know, one of the aspects that we talk about with central bank raising rates and about to go on this embarking of an aggressive policy cycle. We've already seen that from the Canadians. The Fed have already raised rates once. The Bank of England are doing it. The one that's getting left behind, of course, is the Bank of Japan. So much so that, the Japanese yen, which has really just come onto the radar, no one's been talking about it for so long, is now the currency that every single person's talking about in FX circles, rate circles. When will the Bank of Japan end its yield curve control target of 25 basis points? Will they have to move down to, say, a 5-year base, 5-year part of the curve? What could be the impacts if they release that? Could you see this flood of selling yields move up, and then you see this massive spike in the Japanese yen? Could we see a situation where the disdain for this weakness we've been seeing in the Japanese yen means that we see intervention from the Ministry of Finance? One thing's clear, though, the Japanese yen is getting left behind by every currency. It's getting battered from pillar to post. It's difficult. I mean, what's your view? I'll ask you a two-pronged question. First of all, what's your view on action either from the Bank of Japan or the Ministry of Finance to directly intervene? And ultimately, what's your short-term view on the Japanese yen here?
Well, as far as intervention goes, I'm not too sure that we are quite there yet.
Correct.
But I think from a verbal intervention standpoint, this 125 to 130 level, You're at a high risk place right now. And as you know, Chris, when everybody's got their attention on that one asset class, no matter what it is, that's the time when you have to start getting a little nervous. It's interesting. Just yesterday, I received multiple emails with people citing CFTC data at yen at ridiculous levels of being sold. Then we've got the number of days. I read in a research piece from Brent. About like the number of days that the dollar yen's been up.
Yep.
No, it's been up so many days, more than like 50 years, more than I've been alive, more years than I've been alive. So when it's on everybody's radar like that, you got to get a little nervous. Plus, technically, I started seeing a lot of big technical levels come into view. My chart of the day yesterday was actually for that I post just freely on our blog.
Yeah.
Was the sterling yen, or the guppy, better known as the guppy, and it hit that and reversed just like right on cue. But I have to say, I have actually tried to fade this move a couple of different times, and I've been wrong. You know, I've been doing it small. So I've been wrong, but we're getting to levels now that people have their radar. It's on everybody's radar. So what do you think?
I think you're right on the verbal intervention. I think if we were to get, I mean, they've already started to show their disdain, not just the Bank of Japan, but also the finance minister, Mr. Suzuki, as well, coming out and talking about the disdain for bad yen weakness. I don't think they can justify it, to be honest, mate. I really don't think they can. The yen deserves to be smashed, not just from a policy perspective, from a terms of trade perspective. I think we consolidate here, but I think the yen deserves to be weak. I think we're a long way from intervention myself. There could be some changes to the yield curve control policy, which could be coming maybe even as early as next week. Put that on your radar, that Bank of Japan meeting. But the chance of actually buying Japanese yen in the market from the Ministry of Finance, yeah, it's a long, long way away from me at the moment. So I will be looking for pullbacks in dollar yen, CAD yen, you know, those kind of things to resume an uptrend in this policy situation.
And I couldn't agree more, Chris. And I know we need to move on to the dollar index, but I have to say I don't really have a good argument to be long yen for a long period of time, other than some sort of tactical move that might last a day or two.
Exactly.
So anyway, let's turn our attention actually to the dollar index. And the question I have, and I know this is kind of like we have to talk about the dollar. It's like it's commonplace on the show, and we have to mention it every week. But the dollar index, you know, can we hold above 100 in the dollar index? And I think a big part of this move in the dollar index has been the dollar yen. So we can parlay right in this conversation. But, you know, I'm starting to look at rates, and I think that, you know, when you're talking yields look like they might actually have found some sort of near-term top. And I'm not saying that yields can't go higher. I'm just saying in the near term, that looks like a risk. You know, you got the dollar yen stalling ahead of the big 130 level where everybody's like, oh, here comes the verbal intervention. Then you look at the euro, the euro's holding well above 108 and it's not getting pounded as many would expect. The cable's holding 130. I mean, all the pieces seem like they're kind of coming together at this point. And you look at the Aussie, and I could throw in the Aussie and the Kiwi at the same time. You know, those actually are starting to stabilize after a nice pullback. Are we ready for the dollar to pull back as a whole? What are your thoughts here, Chris?
Well, we've seen an bearish engulfing on the daily. Have a look at the dollar index on the back of that. So, yeah, maybe that we see some follow through, and people may be watching this, and we obviously may get the next candle to see that. But in the session we've seen a bearish engulfing, and the bears need to push this back through to the former breakout level, and that's something we are watching now. Obviously, I think a lot of that will be determined not just on positioning. The world is quite long of dollars, but I think as well. Yeah, we need to see something better times in the euro. Now, look, we talked about this last week. We talked about euro dollar quite extensively last week, and we thought that I personally thought that there might be some further strength further strength in the euro. But, you know, we've
Christine
seen
Lagarde left us hanging, right?
Well, we've seen, the market's pricing in about 14 basis points of hikes for the June meeting. For the July meeting, and I think that seems about fair at the moment. So we'll see what happens there. But I think yields are really essential now. If you see bond yields, certainly in the front end, come lower as with people coming and buying, we see a little bit of rate expectations coming out. Then I think the dollar's got downside. But there's still a lot of attractions for the dollar in this market, and therefore I don't think you're going to see much of a clap. But remember, the dollar index is 57% weighted towards euro dollar. It'd be interesting, Blake. I mean, I don't know what you guys are looking at in the US, but if Macron wins the French election quite easily this weekend, do you see any kind of gapping risk in euro dollar? Maybe the dollar index pulls a little bit lower on the back of that. Have you got that French election on your radar for Monday morning?
I do, but I don't think I'm trying to figure out why the euro would actually rally a little bit, and maybe we get a little bit of a gap. Relief, but I guess. I think people are going to sell right into it. The euro has been trading heavy. I still believe it's all Ukraine and Russia, and we might be in the latter stages of this conflict, at least in the near term, and maybe that's the reason why the euro gets off the floor. I don't know.
Watch dollar CNH, dollar yuan. If dollar yuan pushes higher, I think that will be a supporting mechanism for the dollar more broadly. So, we don't tend to trade it because it's the spreads are a little bit wider on dollar CNH, but if the dollar does rally against the Chinese yuan, you are going to see, in my opinion, the dollar stabilise, and I think actually the short term dollar yen as well. That's dictating flows against the Antipodeans as well. So interesting one there as well. Now we want to talk about resilience, and I want to talk about US equity markets because if you go and have a look at the AAII, the investor survey that comes through, I don't think we've ever seen sentiment towards US equities as pessimistic as we've seen here. You can talk about, geopolitical issues, rising inflation expectations, real rates, which I've been talking about, have gone positive, or at least they briefly went positive. We're in the midst of earnings season at the moment. We've seen a couple of companies like Netflix coming out with awful numbers. Netflix, I want to talk about in a second. I mean, how does a stock drop 35%? Is the news there on subscribers material? Could they have detailed that before? But all of these factors that we've been seeing, a slowdown in the economy, people talking about inversion of the curve, and yet you've got the S&P down 5 or 6% for the year. The ASX here in Australia is actually positive. That's crazy. The Nasdaq's down about 14%. European equities are looking strong at the moment. But given all those multitude of factors, sentiment, you could easily argue that these equity markets should be much lower than where they are at the moment. So why is that not happening?
Chris, I'm telling you, one of the other things is I do feel that yields have peaked near term.
You reckon?
And if they start to come down, that's also going to give us another tailwind for the markets as well. And you're right, they are super resilient. And you take a look at Netflix. I mean, is it a value play? I mean, we were talking before we turn on the cameras.
It's a short seller's play.
I guess it is a short seller's play. But at what point do value investors come in and say, look, I'm going to be putting some away for the long term? I don't think Netflix is going anywhere. I've been a subscriber of Netflix since the 90s, me personally. And when I used to get DVDs from them. I mean, I know their business and I know they've been around for a while. I don't think they're going anywhere. And I think that is the future of media, is going to be, live streaming like that. And I still think we're there into the future already, but it's going to continue to be that way. But, you look at some of these names that have been beaten up. I think people are going to start finding value down at these levels. Is it enough though, Chris? And I guess this is the question I'm going to throw back to you. Is it enough to take us to all-time highs? That I don't believe. How about you? What do you think?
No, I don't think so as well. I mean, I still think, there's still so much to digest. This market's chopping around now, especially if the S&P in that situation. One thing that really springs out here, mate, and I agree with you on yields. I think the market is looking forward and saying, we've priced in a lot of rate hikes now. The market's not gone down. Markets have been well hedged using optionality. The options market is not expecting any kind of major tail risks. If you have a look at the put skews that are coming through in the moment. But look at earnings, Blake. Earnings haven't really come down. We've got $2.48 for the S&P earnings for next year. It hasn't come down. Earnings have not come down through this whole cycle. And unless you actually saw earnings being revised markedly down because of everything we've been seeing, I think the equity market's being held up. And credit spreads haven't widened dramatically either, and the equity market's always going to look at that. So we can talk about sentiment, we can talk about all these various factors, but I think a lot of it's priced in. It wouldn't surprise me if we chopped around in equity markets. Where's the leadership coming from? We need leadership to take as much higher.
I don't see any leadership.
And I think that's the situation.
I'm still looking towards Captain Kangaroo.
I'm sitting in the chop camp. I'm sitting in the chopper. I reckon we chop. I reckon it's a range traders market in the short term.
Me too. I agree with you. And I hate it when we agree so much. So let's move on. Let's talk crude. Yeah. And actually I like it, but for TV maybe, right? But let's talk about crude oil. Crude oil is holding above 100 and it's maintaining its gains here. The dip to 93. That was the bottom. I thought we were actually going to get to 89 and I was looking to scoop up some WTI down there, but we held 93. It's really strong. We're consolidating. We got the driving season coming up. We got summer demand. I'm assuming demand's going to continue to drive us higher at this point. But the fact of the matter is we're not backing off, even despite all of President Biden's efforts to try to weaken gas prices. Whatever the case may be, crude is maintaining its gains and it's consolidating its gains. So how do you feel about crude oil at current levels, Chris? Are you a buyer? Do you think we're going to new highs? What do you do?
Yeah, it's a difficult one, isn't it? I mean, I think the geopolitical news headlines around the Europeans shying away from Russian imports continues to be a prevalent and a supporting mechanism through there. We continue to watch what's happening in the headlines, what's happening in inventories. I've never really been a big fan of the driving season, to be honest. I mean, I think it's pretty old school that Americans get up and just start driving around. But yeah, I think you've got something to say. Go on, say it.
I do, but let me say something about this, because actually, ourselves, our family, we're searching around for tickets for our trips this summer. Our tickets for places that we were looking at 3 to 4 times what they cost last year. Yeah. So how many families go, you know what? I'm not going to spend $5,000 on plane tickets. I'm just going to drive somewhere.
No, I don't know. I say it like the Indian wedding season and the support for gold. To be honest, I think people love to reel it out around that sort of time. So gold's up because of Indian wedding season. I mean, I see other sort of factors playing through. But your point's valid. I mean, I don't doubt that it could really impact the demand side of things when structurally, if you have a look at the curve. The futures curve, it's still very much backwardated, and it's, there's a supply shortage coming through there as well. So what do I like to do with gold, with oil? I mean, I still think there's a good dip to be had, and people are looking to buy pullbacks. They're looking to buy weakness. If you have a look at that futures curve, people are incentivized to be long. You hold the futures contract, you wait for the contract to expire, you get the carry from that position, and until they can actually change that, I don't think OPEC are going to do much around that. Now, but Biden obviously flooding. Releasing strategic reserves. People are very much against that. Chigel was against that situation. What happens when America really need those reserves coming forward? But what I think is really good about that situation is you bring supply to the front end of the contract, you lower the curve, you reduce the incentive to be long. But it hasn't happened. I still think I still like buying weakness in crude, but I don't think we're ready to start bull trending yet. What do you think?
All right, I'm going to be driving. So crude's going higher. Just kidding. Kidding.
So you're a bull anyway. Let's have a look. Let's have a look at some of the charts, and let's go to that's a setup. Well, I talked about what was going on US equity markets. The first one I bring up is the S&P 500 or US 500. We've got that red horizontal line, which sort of marked the high back that we saw back in February. We tested that with pretty much to the T, and we sold off. I mean, you can see that blue sort of squared box that we've got up there. I was hoping for a little bit of a push back into that level where we saw the failed break back in late March for shorting opportunities into sort of that mixture of that yellow line and the 61.8% retracement of that level. I was looking for levels, for a little bit of a squeeze higher for better shorting opportunities into that situation, because I think that's where people will be looking forward, especially as we get into some of these, the central bank meetings, especially as we get into inflation numbers coming forward. Have inflation peaked? I think that's something that the equity market's still looking for. I was really hoping to get a move into 45.60 to look at shorting opportunities. We still need to get through 40, that red line there to take us through. So it's a bit of a messy situation, but I do really want to look at what's happening in US equities as a central guide at the moment. Do I look to short now or do I look for those shorts into 45.60? That's the situation that we've got on that market there. So that's something that we're going to be reacting to in the session ahead. What's your thoughts there?
My thoughts are pretty much like yours. If we can get above that 200-day moving average, which comes in right around 4,500, and by the way, that is the 50% or retracement. It's not a fib level. It's just a 50% back of that entire last move lower. If we get above there around 4,500, anywhere between there to 4,600, I'll be looking to sell risk. But I still think that we are in a range environment, as we talked earlier. I agree with you wholeheartedly on that. And I think, this is a trader's market. And so you have to be looking to fade strength and buy weakness. And in this case, we had a nice little dip. We held the 618 retracement. We dipped and we held the nice fib level. We've bounced back, and now it looks like we're going to trade back above the 200-day moving average and give us sellers another opportunity to sell.
I will say one thing. Look at the VIX. The VIX is pushing 20%. People are vol sellers at the moment. We're going into earnings season. If those earnings start coming in better, I know we've seen Tesla's numbers. I know we've seen, what we've been seeing with Netflix, but Netflix doesn't make tech. If we see vol sellers coming in and VIX pushes below 20%, realised vol come down, that's going to bring new capital in. That could get me into that 45.60, potentially with better earnings as well. So something very much keen to watch out there.
Awesome. All right. Well, let's take it over to the ZAR she blows.
Mate, you're killing me on the headlines. These headlines,
you know, they just come to me, man. It's part of being a dad. As long as I've been a dad, you just come up with.
You can work at a tabloid paper.
They get worse as you get older. I guarantee you that. Anyway, hey, look, I'm looking to pick up the rand, and I've played the rand quite a bit in recent years. The volatility that we get in these emerging market currencies are great. The one thing that I have to mention is, even as we've had this minor sell-off in equities, as you pointed out, off the highs, not very much, but even with the Nasdaq retreating 20% at one point, the whether you're talking about the rand or the peso, those currencies really should have gotten beaten up, but they haven't. They've been holding a bid tone. So I think with the rand right up against its 200-day moving average, right up against this trend line, right up against the 38% retracement. By the way, from a Fibonacci standpoint, if we can just hold that level, this thing looks like it's going to turn lower, and we can start buying some ZARs. She blows. So, Chris, what are your thoughts about the U.S. dollar rand?
Yeah, well, if we do see a universal, last night we were just seeing the U.S. dollar sell off against all currencies, and I think it was predominantly led by the dollar weakening off against the Japanese yen, and that sort of fed through. So, if we do see a continuation of that, then dollar SAFA is going to, it's going to come under pressure in that situation. The SAFA still has good carry. We like that. But what I like about this is you've got your levels to look at. You don't immediately, in my opinion, just leave limit orders at those levels unless you're looking at scalps, for example. But I like to look at them. The markets hit those levels. Now we want to see how price reacts there. We take the time frame in to a much lower time frame. We've got the sell off from those levels. We've got the confluence of the 200-day moving average. We've got the downtrend that was kicked in. If we see the sellers kick in now, we take that time frame down, and that acceleration of selling continues or kicks in. I'll take that as a momentum trade. So I really like that idea of having a guide by which to work with. If the selling accelerates, then I'll be jumping on that one there. So a great setup to look at. Obviously, price action is key, but if the selling accelerates from that point, jump on board as a momentum trade there as well. Now, one I want to take that away, and one that we like is momentum trading. Obviously, with different strategies, you can look at mean reversion, you can look at trend following, you can look at momentum. There's all different types of ways of trading in this market. But if we have a look at corn, one of the trends that we've been seeing, obviously there's a big fundamental story that's come through as a result of what's happening in nat gas and the whole sort of energy space and ethanol and corn's usage on that. You can have a look at what's happening in Peru, for example. Their output is on absolute decline, 40% lower than expectations. And go across to what's happening in corn output in the US as well. There's a fundamental story that's seeing corn trade above $8. Now, this was the big race, wasn't it? It was corn against nat gas. Who was going to be the first to wear an 8 handle on this? But when we're looking at momentum strategies, the idea of buying high and selling higher, body in motion stays in motion. Body in motion stays in motion. Corn now is really the epicenter of my world in that situation. We've looked at trades around this throughout this year. We've looked at palladium, I think was one that we've put on our radar. But is this ready to kick on? It feels like for me that this was, I could put the Bollinger Bands on there and see them widening, but it's holding that 5-day exponential moving average. If this kicks, I'm on for this one. I know spreads are a bit wider on some products like this, but the capital gains that you can get on these can be pretty good as well. And it's an extensive trade. But for me as a momentum strategy, Blake, I think this one has to be on your radar there. What do you think?
I looked at the longer term charts of corn, Chris, and this is a big, what you don't see on your screen right here, that's the handle of a big cup and handle that's been building since like May of last year. That is a huge move. And to be honest, it's not something that I hope we see, because if corn is moving up in that type of fashion, there's other commodities that are going to be following suit, and it's going to weigh heavily on the consumer in months ahead. But I'm not going to deny the fact that while it's above, the 8 handle, as you pointed out, around 780 or so, it is bullish and it's in a breakout situation, and it doesn't look like one to be faded. No. And so, as you pointed out, this is a strong momentum type of play.
Yeah, I mean, this could kick on and it could run. I mean, it's not great for the human race, to be honest, to see corn doing this situation. We talk about food crisis and various factors, F&O and all these factors. It is really important to keep this one. I mean, it's one. But yeah, if this kicks on, it could really go. So yeah, I think everyone should have this on the radar at the moment.
All right. Well, I'm going to take us over to the Nasdaq 100. And, as I mentioned to you, Chris, I'm in the camp that yields have peaked, at least near term. Like we're going to see them pull back a little bit, and they'll probably consolidate their gains, well above the 2 handle on a 10-year, probably like a 250, 240. But anyway, if that pressure eases off a little bit, that's going to give a little tailwind to the Nasdaq. And I'm showing you the Nasdaq 100 and I specifically have this drawn as an inverted head and shoulder pattern. However, I will not play it as an inverted head and shoulder pattern. I pointed it out because I think that's poor technical analysis. Anybody who knows the way that I read charts know that a inverted head and shoulder pattern is after a prolonged downtrend. That is not something that we've had. They're actually long-term reversal patterns. The reason why that setup looks good is because people have been just parlaying a 12, 13-year bull market now. So inverted head and shoulder patterns still look good to the upside, but I think the market dynamics have actually changed enough where it doesn't matter. But that doesn't mean that it's not a buying opportunity down here. And I think we could reach for that 200-day moving average around the 15,200, somewhere in that neighborhood. Once again, what are your thoughts about the NASDAQ here?
Well, I think the inverted head and shoulders, we talked about that on Sterling Aussie last week, didn't we? And, that had a bit of a move higher. It's come back now and it's testing that neckline once again. So it's a trade that we still think we should have on the radar when you're looking at that pattern in isolation. I still think that if that rallies from here, Sterling Aussie could be an interesting one, but, that's one for the radar. I think you bang on about what's happening in yields. But look, within the composition of the NASDAQ, I'm just trying to work out where the leadership come from. Obviously, we're not going to get it from Netflix. Tesla came out with some pretty good numbers after the market. That stock was up 5% in the after hours, but it hasn't, we're not seeing 15%. We need Microsoft, we need your Apples, you need your Nvidias to come back in and really find a mojo for that to come. Now, I think that may come from a situation where you see a risk-off move from markets and tech suddenly becomes that safe haven play again. But I'm not sure we're going to see that anytime soon. So it's difficult for me with those mega cap stocks which need to really fire up to see it break back above that neckline of the inverted head and shoulders to see where the leadership's coming. If someone can tell me where that leadership's going to come from in the NASDAQ, I'd love to hear it. Leave a comment because I think that's really where we're going to get the big catalyst to see equity upside in a big way. I think that's a really good talking point. I'd love to hear your comments out there as well. Anyway, let's go to play of the day. All right, I'm going to bring up a very cheeky little pairs trade. There's a few long short strategies that look really good at the moment, I think, for me. I like the idea, actually, just to sort of just chuck some cold water in your face. I like the idea of being short being long the Dow, short the Nasdaq as a pairs trade. I think those trades look good. I like the idea of being long the materials ETF. The XLB and against the SPY. I think that looks pretty good at the moment. But one I've got here is Berkshire Hathaway against ARK Innovation. We've talked about this one before. It had a bit of a pullback, had a really nice rally. We've seen it pull back to that sort of 5 ratio. So what I've effectively done is got Berkshire Hathaway, this idea of quality, value, and I've just divided that by ARK Innovation, which is the pedigree of everything that's high beta. Effectively. And what you can see is when that's going up, it's showing you that Berkshire Hathaway is outperforming ARK Innovation. Now, ARK Innovation should get a bit of a bid in the session ahead because they're very heavily long Tesla and Tesla should rally. But I think this one goes higher. So I like in this situation, the trend is your friend. I give the backdrop in this situation. I think being long Berkshire Hathaway, being short ARK Innovation as a long short pairs trade, I think will continue to work quite nicely in there as a momentum strategy.
All right. Well, as I'm wiping the water off of my face, Chris, as you threw it on my face, let's go ahead and take a look at the yields. And I told you guys, I'm actually looking for a little bit of a reversal. This is actually a completion of an inverted head and shoulder pattern. I know we talked a lot about it today, but take a look at that head and shoulder pattern, the inverted one that it actually has completed. Now, just because a pattern completes does not mean it's an automatic short, reverse, you look to reverse, but there's a confluence of technical levels. So not only did we complete as we approach that 3% level, we have an 88% retracement on the 10-year. That's from the October 2018 highs all the way down to the March 2020 lows. We're at a 261% golden fib extension of that last shoulder. So therefore, I think that these yields have peaked. So therefore, we can actually start to look to buy some of the 10-year, maybe some ZN contracts. For those of you that trade in the futures market like I do, start looking for short-term trades, trading the 10-year to the long side, looking for yields to come down.
You can do that through the ETF side of things. We offer the IEF in that situation if you want to express it in that as well. So that's another way to look at that.
There you go. That's awesome.
Yeah. Okay. Well, I want everyone out there to have a little think and come back with some of their suggestions in the comments. Bank of Japan intervention. What's your views on that? Are we going to see currency intervention? Are we going to see them change the yield curve control target? What's your view on the Japanese yen? What's your view on commodity prices at these levels? Are we going to consolidate? What's your view on the dollar in that situation as well? And ultimately, we talked about where's that leadership going to come through that really drives these equity markets higher? There's a lot of questions that Blake and I don't know the answer to all this situation. I know some of you have got some strong opinions from. I'd love to hear from you as well. So leave your comments in.
I was going to say, I got a question, and let us know how large lizard tastes like, if you could guess that.
Well, it was delicious, mate. Easter eggs are better, but lizards are good. Anyway, look, good to have you all on board. If anyone's still watching the show now, just hit the like button where you can. We'd appreciate it. Leave your comments where you can as well, and we'll see you back next week.